Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, it's a big news day, so make sure you watch and listen to the end because it's a lot of important news that you need to know about. First up, we have the House has approved the government reopening bill, which will now make its way to President Trump, who's expected to have that signed tonight. So this is great news, the government reopening, which will have an impact on the market structure bill, as well as the approval of additional altcoin ETFs and liquidity coming in from the Treasury and much more, which will help markets. And in addition, we got an update from the White House that they are committed to the $2,000 tariff dividend stimulus check to Americans. And even the Treasury Secretary, Scott Bessent, announced that the $2,000 tariff checks will most likely be going to all Americans who make less than $100,000 a year. So we've been talking about the table being set here with the government reopening, Treasury liquidity, Fed cutting rates, Fed ending quantitative tightening December 1st. The Fed New York governor talking about they will return to quantitative easing, starting to buy securities again. You got the market structure bill making its way through the Senate. You got the altcoin ETFs. So a lot of narratives here, right? A lot of major milestones and macro factors, which I believe could drive us into a major rally to the blow off top of this market. I do think this extends into 2026. So we've discussed a lot of this. I've talked about it in my newsletter as well. So we're starting to see it come to fruition here, but we have to be patient. And the markets are still very volatile. And on the market structure bill, the Senate Agriculture's markup, John Boozman told Bloomberg that they're committed to early December. So we recently heard about the bipartisan support here. John Boozman, the Republican, Senator Cory Booker, Democrat, they put out a draft, right, from the Senate Agriculture Committee. So this is really great, guys. Progress being made. Will the bill itself be passed in December? Doesn't look like it's going to happen because the government shutdown. But if that is pushed out to 2026, let's say Q1, then again, see how the timing is forming here, right, folks? Put your thinking cap on. Now, we can't just look at charts. We got to look at the macro factors because these things do influence markets. Market makers and whales, who are the guys who move the market, are going to use these things, right? And I think they're going to bring in retail. It's going to suck in retail because you have this macro narrative. Plus, you got $2,000 checks. Plus, you got rates being cut by the Fed and much more. So again, the table being set here for this bull market to continue. We just have to be able to stomach through the volatility that we're seeing. But, as I've been sharing with you guys on the charts, the macro structure has not been invalidated for Bitcoin. So just keep that in mind. Now, tomorrow, we got confirmation that Canary Capital's XRP spot ETF. Now, this is the full spot ETF. The other one that's in the market by Rex Osprey is a mix. It's not 100% spot. It's partial spot. So this is the first XRP full spot ETF in the United States to go live. And we get confirmation here from the Nasdaq that it is indeed certified to be listed. And here, Stephen McClurg, who is the CEO of Canary Capital, says, "We are very excited to go effective with the first single token spot XRP ETF. This would not have been possible without the leadership of Chairman Atkins, Commissioner Peirce, and all the other fine people at the SEC who are pro-free markets." Now, I interviewed Stephen McClurg on Monday. My interview with him will be published tomorrow. We talk about the XRP spot ETF, the HBAR spot ETF, and the Litecoin spot ETF. Those are the three products they launch as far as altcoins. So you don't want to miss this interview, folks. We talk a lot about what else may be down the line, his expectations, and much more. So that interview will be published in the morning. You don't want to miss it. So make sure you are subscribed, folks. So things are moving along here. I hope you see the bullish setup despite the price situation that we're in right now. I know it's a bit tough, but overall, again, the macro structure is still intact. Now, on the SEC front, we had Chair Paul Atkins speak at the Philadelphia Fed FinTech Conference, and he announced the next step in Project Crypto that includes establishing a framework or token taxonomy to categorize digital assets under the U.S. securities laws. So essentially, the SEC is going to give the guidance on what's a security, what's not, and even tokenize assets and these different things, different types of tokens, right? Where do they fall? What category, right? I think that guidance is needed. Our ICOs, which are back again via Coinbase's platform, are security, right? So all these things have to be clarified. We still don't have a full confirmation here. Some of the additional things that Atkins said is that he acknowledged that the majority of crypto tokens currently trading are not securities, and that investment contract doesn't persist solely because the underlying assets trade on chain. He explained that the commission's approach to how securities laws apply to crypto is anchored in the Howey test, but applied more flexibly and guided by two key principles. Now, principle one is a stock is still a stock, a bond is still a bond, even if it's tokenized. Assets don't change their legal identity just because they're on chain. Principle two, economic reality trumps labels. Calling something a token or NFT doesn't exempt it from securities laws if it represents profits dependent on managerial effort. So, just as we've been discussing for years with Hester Peirce, John Deaton, and a lot of people who are covering the SEC versus Ripple case, anything could be a security depending on how it's packaged. Now, inherently, tokens on the blockchain are not securities, but if you package them in a certain way, similar to Howey, he used orange groves. So if it's the orange inherently a security, that means all our oranges that we eat in our house at the supermarket are all securities. But that's ridiculous, right? It was how he packaged it. So that's we have to make sure that is clear, and I think the SEC is looking to provide that guidance. Some more details here. The proposed token taxonomy currently worked on by the Crypto Task Force is as follows. Network token / digital commodities equals not securities. Digital collectibles, NFTs, game assets, art equals not securities. Digital tools, tickets, memberships, credentials equals not securities. Tokenized securities, tokenized stocks and bonds equals are securities. So this is a great summary by Eleanor Turret, by the way, shout out to her. So we're seeing progress here, and this is the guidance the market needs. And once you make these things clear, and I believe some of this will appear in the market structure bill, the Clarity Act, it will allow more capital to flow into these different assets, because there are big institutions out there, they have their legal teams, and they want to make sure that they're not putting themselves at risk to get a lawsuit or get into any legal trouble and all that, right? But if the regulator and the government says, hey, here's what you can and cannot do, that makes it very easy, more capital to come in. So this is very, very bullish. Nate Geraci of Nova DS Wealth says the SEC chair Atkins provides his current crypto framework, and he gave a quote here from some of the details. To the investor trying to discern the difference between buying a tokenized share of stock and buying a collectible in a video game, we would offer more than a web of enforcement actions. Nate says, all I can do is clap. What a shift. So it's night and day, right? Under Gensler, scumbag regulator Gary Gensler, it was brutal, but we now have mature people, sensible people who are working on these things and looking at it logically. So this is really great. Now, folks, this episode is brought to you by iTrust Capital. iTrust Capital is offering you a unique way to invest in crypto and precious metals such as gold and silver. So iTrust Capital offers a IRA, a self-directed IRA, where you can invest in, as mentioned, crypto assets and precious metals, and you can roll over your existing 401k and IRA to this platform and invest. And you can invest in 80 plus crypto assets plus the precious metals as mentioned. And there's 24/7 trading access. There are low fees and no monthly fees. So this is a great way to get tax benefits if you want to invest in crypto for the long run, even precious metals. So great way to do it. And they offer an amazing custodial product called premium custody accounts. Now, this is significant because it uses institutional grade custody such as Coinbase Prime, which BlackRock and other big institutions use, in addition to Fidelity and Fireblocks and much more. And it is a closed loop system, so your assets are isolated within a secure custody environment. And it's seamless access and transparency. It's regulated. And folks, like I said, other institutions are using this. So I think second to self-custody, this is one of the safest ways to custody your crypto assets and you can sleep at night. And they recently added support for privacy coins, which have been going crazy, right? Zcash They added Dash, they added ZK Sync. Zcash obviously is the one that's been going parabolic. So you can get access to all the major assets on here, guys, and it's easy to use. And once again, tax benefits, right? We know when you sell your crypto, there's capital gains tax. Well, this is a way to help mitigate some of that. And folks, I have an account with them. If you use my link, you can get $100 funding bonus. So be sure to check out I Trust Capital. Link will be in the description. Now, folks, I want to talk to you about the biggest capitulation I've seen in the crypto market, and that is JP Morgan officially launching their JPMD tokenized deposit token on Base, Coinbase's layer 8 Ethereum layer 2. So I want you to share this news to the crypto skeptic that you know, maybe in your family, maybe your friend, or whatever it may be, because this is significant news. This should be making major headlines. The world's largest bank, JP Morgan, has capitulated. They have bended the knee. We see they're going full embrace of crypto. But if you know the history of JPM Coin and JP Morgan launching Quorum, a private permission blockchain, and now they are forced to go to public chains, right? This is incredible. So Brian Armstrong said the first bank issued USD deposit token, JPMD, is now available for institutional clients to use running on Base. On-chain payments are the future. This is incredible. And some more details here. The JP Morgan clients can swap the JPMD token for USDC stablecoin on Base. Simon Taylor, one user on X, says this sentence should break the internet. JP Morgan payments moves trillions of dollars per day. It dwarfs the entire stablecoin industry. So, folks, we are seeing massive capitulation. JP Morgan realizing the power of public blockchains when they were all against it, trying to shut these public blockchains down, trying to shut Coinbase down with Operation Chokepoint 2.0, lobbying Elizabeth Warren and Gary Gensler to attack the industry. Now they have to bend the knee. Folks, like I said, share this news with a crypto skeptic because this is a massive capitulation. It's even greater than JP Morgan offering you the ability to invest in crypto, because that is, okay, we can make money off of it, but this, oh, we need to go to the public chains that we were trying to destroy. We can't use just our private walled garden anymore. We got to go to the public chains. And what we've seen is that the way to do it, because we're going to be in a multi-chain world, is you have to issue your token like the stablecoin issuers are doing on multiple chains to get adoption. So this is a massive capitulation, folks. The king of the fiat hill, Jamie Dimon, crypto's final boss, fully capitulated here. It's incredible. This is why I'm bullish, not just on this bull market, but future bull markets. I've been saying for a while now, the economy, the markets, the governments will all be running on blockchain rails. Now, here's another example of Wall Street expanding their crypto initiatives. Franklin Templeton expands Benji tokenization platform to the Canton network. Now, for my avid listeners, you know I've been talking about Canton network. When that token goes live on exchanges, I'm looking to buy it. Now, I'm not going to buy into the pump. I'm going to wait for the market to cool down, then to grab it. I interviewed the founder and CEO of Digital Asset, that's the name of the firm, which is working on a Canton network. And this network is backed by Citadel, Goldman Sachs, and a lot of the Wall Street folks. So it's a privacy blockchain that is public. So it has the privacy feature built in and is backed by these institutional investors. So this is a token I'm going to look to get, not financial advice. Do your own research. I'm just sharing from what I've learned from my research. And, I'll let you know when I do take a position. And like I said, I don't buy anything when it pumps. I wait till it pulls back. But you can see they're getting adoption. So Franklin Templeton has expanded its tokenization platform and investor platform, Benji, to the Canton network, making another step in the growth of institutional blockchain infrastructure for tokenized investment products. The integration announced Wednesday connects Franklin Templeton's proprietary Benji technology platform to Canton, a blockchain network designed for regulated financial institutions. The move enables Benji's tokenized assets, including its on-chain U.S. government money market fund, to be used as collateral and liquidity within Canton's global collateral network. Huge news, folks. The building continued. These people don't care about short-term price movements. They're not in fear. They're not depressed. They are just building because they know what's coming. Here's another example. Visa pilots fiat-funded stablecoin payouts for U.S. businesses. So we continue to see the major credit card companies, Visa, MasterCard, and others, dabbling with crypto, stablecoins, tokenizing, doing much more. So payments giant Visa has launched a pilot in the US allowing US dollar pegged stablecoin payouts to be sent from business accounts funded using fiat currency such as US dollars. Visa announced the pilot at the Web Summit in Lisbon, Portugal on Wednesday, which allows users of its digital payments network, Visa Direct, to send stablecoins such as USDC directly to a crypto wallet. Folks, do you see what's happening? We've moved past the fad phase, right? This is all a scam and all that, and these people are building. Now, there's still a large part of the public that are not educated. They're not looking at things like this and like, wait a minute, why is Visa, why is Jpmorgan, all these companies, they haven't gone beyond that. They've read headlines, they've listened to people who are uneducated on the matter, and they just run with those narratives. But this is why it's important for you to educate yourself, understand what's being built here. And like I said, blockchain rails are going to power the economy, the markets, and the governments. That is the end game. And assets will be on the blockchain. Obviously, our fiat currency, the US dollar, or whatever currency you have in your respective country, it's all going on chain, folks. We're headed to a more digital world, not a less digital world, and blockchain is going to be a big part of that. So this is incredible to see these companies adopting the technology, but they have to, or as we've often talked about over the years, they will have their blockbuster moment, right? Blockbuster failed to adapt to the internet. They had the opportunity to even buy Netflix, and we know how that story ended. So same thing is happening here. That's why all these guys are scrambling. What can we build? How can we integrate it? How do we stay ahead of the curve so we don't get disrupted and we don't lose revenue and market share and all that stuff? Final news item, UAE's digital dirham CBDC pilot completes first transaction. So across the globe, everybody's building and expanding and using this technology. So the United Arab Emirates has made the first transaction with its central bank digital currency in the first major update to the project since it was announced in March. The United Arab Emirates Ministry of Finance and Dubai Finance said on Tuesday that the transaction was part of the pilot phase of the digital dirham project and used the government payment platform mBridge. The agency said the transaction was a first for the UAE government and was a step towards broader adoption of the national digital currency across both government and private sector operations. It's the first major update on the CBDC since the UAE central bank said in March that it expected the digital currency would begin its rollout in the fourth quarter of 2025. Folks, do I even need to say anything else? Look at the examples I've given you, right? And again, share this information, maybe this podcast, however you want to share it, doesn't matter, right? But get it to the skeptics, get it to the people who are not paying attention. Say, hey, I want you to read through this and then let's talk, right? Because there's an opportunity here. And look, not everybody is going to care, right? Depending on their situation, but you have to recognize what's coming and you can benefit from that via an investment. So it would be like someone coming to you in 1993 or something like that and saying, hey, there's this thing called Google, Amazon, eBay. You should check them out. And you have an opportunity to invest, maybe buy the stock or whatever it may be, or private equity and things like that. That's the opportunity that's here, right? So please recognize what's happening. These countries and these companies and Wall Street and all the banks, they're not doing this for fun. They recognize the disruptions at their doorstep. They recognize this is the future. So they're all building. It is a global movement and embrace of this asset class and technology. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way you can support me in the podcast if you appreciated this content is to subscribe to my free email newsletter. It is 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. It includes videos, text write-ups, downloadable materials, and much more. You can check out the curriculum on the website and you get lifetime access. You can share the access with your friends and family if you want. Go at your own pace, of course. And of course, I regularly update this course to make sure it has the relevant and most up-to-date information. So check it out. Go to mycryptocourse.com. Folks, thank you for tuning in. I appreciate you all, and I'll talk to you all later.